is the driver of speculation, risk, excess capital, all of that stuff, because people have higher earnings, we're not positive yet. So although tech stocks have done well, stock markets have done decently well, Main Street has not. Businesses are still struggling.
Yeah.
But once that turns, and I think the Federal Reserve will be cutting rates because, as we've been saying for a long time, Julian and I, inflation is coming lower, and it is. Then we will see Main Street or people with mortgages, household income increasing, and that pushes people out the risk curve, and that's what drives the real cycle, particularly the alt season. So the alt season we find is highly correlated with ISM.
Hi everyone, welcome to Smart Invest. Although Bitcoin is close to its all-time highs, this rally doesn't feel like the massive, retail-driven surges of 2017 or 2021. Instead, it's characterized by quiet strength and strategic positioning rather than hype, leverage overload, or meme stock energy. For this reason, macro experts like Jamie Coutts and Raoul Pal are focusing. In their most recent discussion, they contend that what we are witnessing is not merely another bull run, but rather the beginning of a radically new type of crypto cycle that is longer, slower, and structurally deeper. In addition to investing in blockchain infrastructure across national systems, Middle Eastern sovereign wealth funds are beginning to view Bitcoin as a strategic reserve asset. Global liquidity, which is arguably the macro engine driving all significant asset flows, is also recovering from a multi-year decline, paving the way for a fresh influx of capital that has the potential to propel cryptocurrency well beyond present projections. Together with increasing institutional alignment, this change in liquidity dynamics has the potential to reshape cryptocurrency bull markets from transient speculative outbursts to long-term, macro-driven expansions. Jamie Coutts provides the data to illustrate how growing global liquidity translates onto Bitcoin's price action, providing a potential roadmap for the future. Raoul Pal shares insights from private meetings with sovereign investors in the Gulf. Don't miss this if you're keeping an eye on macro trends, tracking institutional capital, or getting ready for what might be a huge next leg in the crypto cycle.
Yeah, great work. Now, the other dashboard that you use is the one that's on the Real Vision platform, just running through, some of the key tokens and stuff like that. And also, if there's anything else you want to add about Bitcoin, I mean, what you've shown us is it's super neutral from here, so we can have a run and let's see what leverage and other things build up. What else should we be looking at?
So looking outside of Bitcoin, so we are in a super bullish liquidity regime, right? So, and Bitcoin is going to be breaking the all-time high. It already has in the last week or so, and it's retraced. And you could chop around here, but I don't think we're going to see a hell of a lot of like downside, not a large move, given those three risk scores where they are, then none of them being excessive. And so, through the analysis that we've done, there's obviously this sort of lag that occurs with the rest of the crypto complex. And, unlike previous cycles, the adoption's coming through, and now we've got sovereigns and nation states endorsing, attracting businesses that are focusing on blockchain. So there's a whole new element or dimension to it, but it's still a very hard asset class to trade because most people by now would have thought that it would all be en masse a lot higher, but it's been very selective so far. So the way I've tried to think about, adding a new lens on crypto market and the broader sort of altcoin market is just sort of just adopt some of the traditional market breadth, analysis that you and I have been using for 20, 30 years. And bring it to the crypto market. And the only way you can do that is if you start using sort of index data on crypto. So I've partnered with this company called Bitformance, and we've created the top 200 index, market cap weighted, equal cap weighted. Then we've done sectors and subsectors. And so that allows me to do all sorts of interesting things from a market breadth perspective. But this is just a chart showing the top 200 equal weighted index. So it's a pretty good proxy for like altcoins. Every single asset in the top 200 weighted equally. And you can see it's been stop, start, stop, start. It's, the opposite of the Bitcoin chart, which has pretty much been up to the right. We've had these bursts of activity. So what I've created is an advanced decline line. So equity traders and investors are familiar with this one. So equity, the advanced decline line should be going up as the market goes up. And if it starts to trend down as the market's going up, that just means that less and less assets are participating. In crypto, we've had a structural bear market ever since the 2021 bull market, where you can see here that prices have sort of tracked sideways, up to sideways, but the ADL, which is this white line in the subchart, has been going down.
And this can also be, I'm guessing this is highly correlated with Bitcoin dominance.
Yes.
Is another simpler way of looking at it.
It's because of the market cap aspect of Bitcoin dominance, it doesn't tell you as much about breadth as like the ADL does. Yeah. It's just another, I use the Bitcoin dominance chart as well. But what I'm starting to see is, I was calling this back in March and April that the bottom was forming in altcoins. And so it doesn't look like much now, but we are starting to move higher with higher lows. The oscillator, which I've created like a MACD, really does do a great job of coinciding with a typical alt seasons or bursts of outperformance. And so that triggered in April, late April. Now, it feels like a shitty alt season because if you look at sort of the DeFi coins, some of them are all round tripped in the last, couple of weeks. But it's structurally looking like we are building an alt season right now. And this is just one of the clues that I look at to show me that, okay, we've got higher lows on the ADL. The MACD is positive, and even though we've pulled back over the last couple of weeks, it's still positive. And so instead of these short bursts like we saw in Q4 of 2024 and sort of Q1.
Does this chart go back to 2021 so you can see what a full alt season looks like?
Yeah. So
yes, so you can much fatter. Look at that. 2020.
Right. So 2020 and 2021 was extraordinary because we actually had a rising advanced decline line. So that just meant that the number of assets in the top 200 that were making new highs every day was positive, a cumulative basis, day on, day out. And then really in this bull market, it's been sort of a structural in this sort of
does this go back to 2017, which is, I think, the most similar to now? I don't know if your data goes back that far.
It starts to get a bit wonky because the index construction going back before to 2020 was pretty hard. So I don't even trust it. And you can see on the chart here, it just there's a rebalance here, so I don't tend to use it. I wish I could. It maybe if we sort of created a top 50, it would be a better data set to work with in that 2017.
Yeah, because there was just less around, right? You had a bunch of ICOs, but you didn't have a lot of alts, really. Not like now.
Yeah, you couldn't have even really put together a top 200 back then.
Yeah, agree.
Jamie Coutts' revelations here represent a fundamental change in our understanding of Bitcoin's connection to global liquidity, not just another bullish story. His main contention is that global liquidity is the driving force behind Bitcoin, not merely one of many variables. And that force is currently making a clear upward turn after suffering the longest liquidity contraction in more than 10 years. These liquidity breakouts have historically led to Bitcoin's most powerful price movements, and the current configuration is even more alluring. Higher interest rates, less speculation, and tighter monetary conditions have already been borne by the market. Low leverage, high sensitivity to capital inflows, and an atmosphere conducive to growth are what remain. Importantly, Coutts notes that, as we witnessed in late 2022, Bitcoin bottoms typically occur at the precise times when liquidity begins to increase. On the other hand, tops frequently trail liquidity peaks, allowing us more time to profit. His model indicates that we have just entered a super bullish liquidity regime. A unique situation in which even modest growth in liquidity can yield large gains, possibly up to 3 times, 5 times, or even 7 times returns. And that's before we take into consideration the wave of sovereign adoption Raoul Pal talked about, in which institutional investors and nation-states are starting to view Bitcoin and blockchain technology as strategic assets. When taken as a whole, these indicators suggest that we are probably at the start of a significant new phase, rather than the end of a cycle.
So this is the start of an alt season you're seeing there.
Yes, yeah, it is the early signs. And the alt season indicator, which is the number of assets in the top 200 that are outperforming Bitcoin, bottomed again in sort of March, and it's been sort of a tepid rise. So it's now at about sort of 17%, which is to say only 17% of the top 200 have outperformed Bitcoin in the last sort of 90 days. You can see that, a good alt season will see a broad multi-month rise in the alt season indicator, whereas we've seen sort of very narrow, sharp rallies, but not to the sort of levels that we saw back in 2021. And look, I actually don't think we're going to see, broad-based outperformance of Bitcoin across the entire market. I mean, you'll see periods over the next year and a year and a half, maybe where you've got like, 80% of the assets in the index outperforming. But honestly, I think the market is starting to act with a bit more discernment. I say that in light of the fact that like some of the meme coins have been doing really, really well right now. So it's not like fundamentals are everything. Culture still matters. But as this market becomes much more sophisticated with the type of asset owners and investors that are coming in, they're going to start using fundamentals. And if there is no net worth growth, either in a protocol or in a layer 1 or a layer 2, it's not going to rally just because Bitcoin's rallying.
Because also, I think of it as a function of the amount of capital and attention available, right? So like attention times capital, right? That's the whole game in this. And there are so many coins now, ignoring all the meme coins for now, but just generally speaking, there's a lot. So we don't have enough capital to drive all of the speculation and all of the things. So the market has to focus where the attention goes. And so, yes, you'll see pockets of memes doing extremely well because they capture attention and thus capital. But generally, it feels like the mid-tier outperforms Bitcoin, but the bottom tier, there'll be cases of things that do because they're new and they're interesting and they get attention. But generally speaking, there's just not enough capital that flows that far out the risk curve.
Yeah, I'd have to agree. There's definitely going to be some there's going to be some big outperformers for the rest of this cycle. So you'd want to at least be keeping a fairly close eye just on network growth and adoption. But yeah, I mean, I think it's like one of the meme coins, is it SPX 6000 or something? You probably know this better than I. It's been
it's SPX 6900. I get trolled all day because I once mentioned it and I don't own it, but yeah.
Yeah. So there's going to be stuff like that for sure. But, I think there's ways in which, investors can have exposure to the altcoins, and do it through sort of a much more rational, fundamental lens. And we just had actually, the head of data at Blockworks Research on RB, like yesterday. I interviewed him, Dan Smith. He's been doing, quite a lot of work in sort of understanding, new demand metrics. And so he, instead of looking at just fees, Blockworks is sort of promoting the use of something called real economic value, which includes fees, but also MEV. And I went and back tested the data, and it's actually got a pretty high correlation to price as well. So, this is all going to get understood very, very quickly by, the Franklin Templetons and the Fidelities and all the new asset managers that aren't in the space or that will be coming into the space, because they're sure as shit not going to start, following.
They need to sign up for Real Vision. They need to sign up for Real Vision Pro. That's where you get all of this and all of the macro work that we do as well. That's what they need to do.
Yeah. Yeah, absolutely. Good promo.
Yeah, but I don't think people understand the depth and breadth of what we do at Global Macro Investor. The sheer amount of stuff we do on the macro crypto nexus, and then what you do in a lot of statistical analysis, a lot of in-depth analysis, real depth in stuff. This stuff doesn't exist anywhere. I mean, I'm really proud of what we've all built. It's just very cool.
Yeah, look, I mean, the degrees of freedom that we have at Real Vision to go explore like corners of the market and also bring the institutional lens to what's been a pretty cowboyish space really for the last couple of years is truly exciting. Like no constraints and just also, I guess bringing that more TradFi sort of lens into the space. I think it definitely helps.
Jamie Coutts has created a comprehensive macro-intelligent framework for precisely managing cryptocurrency volatility. Not just a model. He has created a sort of cycle timing dashboard by converting global liquidity signals into a dynamic, real-time risk score and adding information on market leverage and unrealized profits. Additionally, there is a definite bullish signal flashing on that dashboard right now. Global liquidity is increasing at an accelerated rate. Leverage is still low. The positioning is steady. Furthermore, Bitcoin is still following macroeconomic trends rather than decoupling into speculative excess, despite a robust 40% rally from the April lows. The important takeaway from this is that market tops occur when valuations exceed what underlying liquidity can sustain, not just when prices are high. However, this cycle doesn't appear to be like that. Actually, compared to the earlier peaks, including the Q1 ETF-driven surge, the current configuration appears to be far more structurally sound and sustainable. We might be in the early stages of a very different type of cycle, one that is propelled by institutional maturity, disciplined flows, and macroeconomic alignment rather than hype, if momentum keeps increasing without leading to excessive leverage. Or mania, the development of the asset class itself is more important here than price. Therefore, you should closely follow what Coutts is describing if you're monitoring the relationship between liquidity, market structure, and cryptocurrency. Timing.